Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, July 11th, 5:20 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we remain in an uptrend. You can see over here on the trend gauge, we've got market leadership showing bullish slash uptrend. Leaders been acting very well. Pullbacks have been contained and within reason. And the five major indexes that we track for across three time frames uh, also showing bullish across their short-term 21-day moving average, medium-term 50-day moving average, long-term 200-day moving average. NASDAQ 100 pulled back slightly more to the toward its 50-day moving average, less extended than it's been in quite a long time. We peaked near 12%, down below 6% now, which is still on the high side, but hey, it is a bull market. So what happened today? Small and mid caps led the way again in another broad rally as some of those big cap NASDAQ 100 stocks showed minor distribution, but it's almost planned distribution as the NASDAQ 100 has indicated that they are going to uh, reallocate the percentage size of the largest stocks in the index, and what you're seeing is money flowing out of the Microsofts, the Apples. Those are the two big ones at the top, and into other quality stocks as the anticipation is that the reweighting, those will obviously be weighted up as the sum of the 100. There's actually 101 stocks in there because I think somebody had a spinoff. But the total, I mean, has to equal 100% either way. If you're taking percentage away from the big boys, it's got to be reallocated across the rest of the spectrum. So here are the numbers today. Another good day. Bulls certainly happy. Bears continue to scratch their head. Our 8 ETF composite, the RG8, up 1.07 percent. Got an email. Let me review what these charts are again very quickly, or the tickers. IWO, which is the growth half of the Russell 2000, SLYG, the growth half of the Russell 6, the S&P 600 small cap, MDYG, the growth half of the S&P 400 mid cap, FFTY, which is the IBD 50 ETF, QQQJ, which is basically a mid cap tech focused NASDAQ 100, PDP, which is a momentum ETF, SPHB, which is a high beta ETF, and ARK-K, which broke out today. Those are the 8 ETFs that we track every day. We add them up, divide by 8, give the composite. The leader today was ARK-K. The laggard was FFTY, which was slightly negative. Not really a surprise with it being slightly negative. A couple of the bigger leader stocks pulled back a bit, but it was kind of a junk rally, junk joining the rally today. That's why ARK-K was so far was the leader. S&P 500 on the day closed near the highs of the day, up 0.67%. NASDAQ 100 also near the highs of the day after being in the red most of the day, up about 0.5%. Dow has been showing relative strength versus the NASDAQ 100 recently, up 0.9%. Mid caps up 1.1, Russell up 1%, global 60/40 stock and bond up 0.51%, in-house GROTECTION up 1% on the day. Let's dive into the charts and then the tail of the tape. And as always, we start with the S&P 500. You can see regaining. Let's get rid of the stochastic. All the stochastics turned bullish on a daily. The daily stochastic turned bullish on all 5 of the major indexes. Also, you'll see that updated when we get to the tail of the tape. But here you can see the nice move, spending 3 days on or below the 8 EMA, regaining it today. Now back approaching the top of this 3 to 4 week base that we've been in. If you take a look at a weekly chart, you can see how tight that action has been here. showing as 5 weeks, 5 weekly bars here on the weekly chart. Nothing bad here today. This is day 31 since this was after the close this day was the big Nvidia gap up. That was the S&P closed that day back above the 21 EMA after playing ping pong around that area with a failed breakout. Looked like we were breaking down, but this brought extreme strength into the market, solidified the AI technology idea with the big sales forecast jump that NVIDIA reported, and it's been a nice rally since then. Let's go to the NASDAQ 100. Nice day today. Again, closing at the highs, some early selling, regaining the 8 EMA. And this despite the fact that Microsoft actually ended up barely higher after being red pretty much all day. Apple slightly down on the day, but those are the two big weights at around 12%, and that'll be cutting back. But this is a very nice looking chart too. You can basically see we've got a very similar setup here, a flat base after a nice run up, bullish action holding on above the 21 EMA, little bit of a triangle more look here versus the NASDAQ 100, which again is reflective of something that I'm happy to see, which is a uh, minor underperformance versus the S&P 500. And once we got so extended, we could sell off either through time or through price. If it was going to be through time and we were going to continue to see a harsh pullback like this, but it bullishly paused at the 21 EMA, made another run at the top of the range, and it's letting the moving averages catch up to it. As you can see, this is a very nice slope of the 50-day moving average. Versus the NASDAQ 100. And as I said, closing, let me get back to track price, closing 5.9% above the 50-day moving average. Let's go to the Dow Jones Industrial Average, back above 34,000. A bit of a declining tops trend line here, similar to what we're seeing on the NASDAQ here. But still a base nonetheless, a couple of weeks long. Let's go to the weekly chart, see how that's looking. Again, you got the declining tops trend line there. So nice tight basis forming. That's what we want. It lets the cream rise to the top. It cools off the strength in the indexes, and you can't go straight up. But we are going straight up here on mid caps after a positive reversal at the 21 EMA last Friday. 3 nice days up now, breakout reclaiming the pivot point of this cup and handle. Note the relative strength on mid caps here. Happy to see that after relative weakness while we formed the handle. Let's go to small caps now. IWM. Hey, close above that the top of that pivot in the handle there now, and very similar to MDY, putting in a positive reversal on Thursday, getting back above the 21 on Friday, clearing the 8 on Monday, clearing the pivot today. After 3 days up, it's normal to expect a little bit of cooling off. But hey, you can see here we had 1, 2, a pause, 3, 4 out of 5 days up there. You can rally, but buying at the top of the third day is usually a recipe for disappointment. Um, so I'd like to see this chill a little bit. Market doesn't care what I want, but I can still express what I'd like to see and what I think is healthiest for the market. Here's the VIX. After this panic kind of candle on Thursday, but pulled back as the indexes showed afternoon strength on Thursday. You got Friday, Monday, Tuesday. The 21 EMA is holding these last 4 days of the pullback. We're back below the 50-day moving average, so a little bit of a triangle forming there on the VIX. I would expect it to break the complete opposite way of the way the indexes break, and we could be set up for some volatility tomorrow because we've got the CPI report coming in pre-market, a check on inflation. Here's UUP, 4 days down, on the UUP coincides with a 4-day rally on the market, so that reverse correlation is still intact, inverse correlation. Breaking now below the 50-day moving average. Again, kind of set up for a bounce here, but the bulls like to see the weak dollar. U.S. Stock market bulls like to see the weak dollar. How did precious metals do today? Disappointment on silver, trading tightly, very tightly, right around the 21 EMA. And then GLD tried to make a run above the 21 and actually held the 21 on very tight trade, up 0.4% on the day. So now we want to watch and see if this can hold on this 21 and build on it as it goes into the declining 50, or is it going to break down again the same way it has over the last 4 or 5 weeks whenever the 21 day got challenged. GDX was set up. We were considering taking this trade today, but if you look at an intraday chart on GDX, you can see the strength early faded, a little bit of strength into the close, but still closed back below the 21-day moving average. Again, disappointment continues for 1, 2, 3, 4, 5, 6. This is the seventh week. Changing character would be to move above it, also to get the relative strength line back above the 21 EMA of the relative strength line. Would be nice to see that also, and then would challenge the declining 50-day moving average. Let's check in on Bitcoin. Coin was up 10% today, almost 10% today, as they're supposedly going to be the SEC preferred surveillance exchange for monitoring the spot Bitcoin. That was kind of what I read today. How that will equate to their earnings and sales going up, I have no idea. But since they were since they were under scrutiny from the SEC, that certainly is welcome. Anyway, tight action in Bitcoin over the last 5 sessions here. As you can see, this is coiling for a move higher, in my opinion, since it's by the bottom of the range and it's holding the bottom of the range. On the other hand, if you break the 50-day moving average and that 16 level, that tells you all you need to know in the short term. Let's flip over to bonds. BND, fourth day of the let's say fourth day of higher highs, closing here at the declining 80 MA on bonds, complete opposite of what we're seeing in stocks. That corresponds, as you'll see in a minute, how that's hitting up rates. But bonds up slightly on the day. The long-term bond ETF TLT up 0.51% on the day. That means we got a little bit of a reprieve on interest rates. Let's go to TYX. 30-year. So here, note this 40 level that has been an important level going back to December. 3 closes on it or above it, a pullback, but held today. We're keeping an eye very closely on this level. So 4 days up with the rates. Finally, a day of a pullback. Let's go to TNX, the 10-year. Back below that 4 level where it spent 3 sessions above. So for now, that's a failed breakout above this 4.0 level on the 10-year. We'll see what tomorrow brings, but we don't want to see this taken off to the upside, or let's say stock bulls don't want to see that taken off to the upside. Let's go to the tail of the tape. You can pause this. I'll hit the highlights. Note that the stochastic indicators for the 5 indexes and the RG8 all turned positive. NASI RSI flipped back up to positive yesterday. Neutral on the dollar, almost bullish, and it will be if it breaks the bottom of this range. That 8-month high breakout in rates. Let's flip the color to that on yellow, and we'll see how that shakes out tomorrow as I edit live here. In a couple days, we'll get the AAII bullish and bearish percentages updated. No real news today, but as I said, CPI tomorrow before the open, and then PPI. This is the consumer price index, the producer price index on Thursday. Day count up to 27 days since the breakout First day back above the 80 EMA on the S&P, 31st day above the 21 EMA on the S&P. And this is really a 4+ week base now that we're working on the S&P 500 and the NASDAQ 100. Expectations remain positive as long as we're above the 21, as we have been for a while on those indexes. Reclaiming the 4,400 level on the S&P, but this 4,440 to 4,458. Let's take a look at the S&P on a 60-minute chart here. You can see we ran into that area again today. Let me draw the vertical line there, or the horizontal line there. You can see it provided support while we were pulling back at late June, resistance midweek last week when we tried to get through it, and resistance again today as we came up into it. So that 4440 to 4458 level is where we need to get above to break through the top of the range. Let's see, where are we here? Let's look at this very quickly, what the S&P 500 did intraday. So you can see minor gap up, pulled back immediately, but stopped at yesterday's highs, acted as support, a run up to 4430, and then a nice base, little bit of a handle, and we broke above it out of 4430 up to 4444, highs of the day before pulling back slightly. So good intraday action. 11 out of 11 sectors finished positive, led by oils and ARK-K. On the weak side, weak meaning flat or just barely positive, semiconductors, staples, and medicals. On the downside, biotech weak, solar's weak, silver weak. Here are some stocks we're going to show charts of for our focus. The only change in-house, we bought NRGU, which is a leveraged oil ETF, 10 of the biggest oil companies in the world. As oil continues to show strength, starter position in this, raised our adjusted beta slightly. Bottom line, broad rally again. Non-tech sectors, 4 of them made new recent highs: energy, financials, industrials, and real estate. Let's take a look at those charts very quickly. Start off, here's energy on a daily chart, breaking above. So highs going back to late April for XLE, XLF, financials, done falling apart for now, clearing last week's highs, making highs going all the way back to when the banking crisis started at the beginning of March. XLI Industrials, we identified this a couple weeks back about how strength was coming into it, making a higher high today. And real estate, which is, an area we were flat against participating in for a while, but you can't argue when it's making highs since back with March when the banking crisis also started. So, as I said, broad strengthening. It's not just 7 tickers that are leading the way again. The strength is going into other sectors. And like I said, the bears continue to be confounded. As I said, non-techs, 4 sectors making new recent highs. So let's get to some individual names now. Weakness in the portfolio today. Celsius lagged all day. Didn't see any real news on it, but it did undercut and reclaim the 21 EMA. We've got that 140 area continuing to act as good support. Nice to see it reclaim the 21 by the end of the day. That was really the only major weakness in the portfolio today. On the plus side in our holdings, Uber, CFO left yesterday. We gapped down on that, but man, look at this 5-minute chart here, and you can see buyers showing up immediately. This is exactly what you want to see when you've got an institutional quality name that gives the institutions a chance to get it below some recent prices. Nothing but buying coming in. As Uber gapped below the 21, reclaimed it by the end of the day, and right at, if not at, new closing highs for this rally. So good stuff there. Also a great day on DT. Initially, we added to this last Friday. We're disappointed with the negative reversal, but we've been rewarded with 2 very strong up days on DT, very clearly breaking above this 53 level now into 55. This is in one of our top 3 holdings inside of GROTECTION. And let's see, Nail, another, this is a three-time real estate ETF up 2.5% today. Nice reaction off the 21 EMA. You know that we're using that not by Nail, but we're using it based on the underlying ITB. Uh, Nice bounce off there and approaching recent highs from 2 weeks ago. So those were the portfolio leaders. Let's take a look at a couple that acted well that we don't own. Net, second big up day, back above the 21 EMA, the 60 level and the 50-day moving average, bouncing off that level. Generac, another industrial that's been acting great, off the 21 EMA, nice move up, cleared the 80 EMA, and this maybe the handle that we were looking for when we broke out of that base without really forming a handle. So perfect bounce off the 21 for Generac. Big volume on the way up on the right side of that base. Some a little bit of distribution during this 2-day pullback, but volume coming in today, cementing the bounce off the 21. Schlumberger, we've been talking about renewed strength in oils. Look at that follow through to the upside initially after Friday's big strength. OIH with a nice day too, up 3.5%. The big three in there are Halliburton, in addition to Schlumberger and BKR. You can see very nice action there, and we bought NRGU. Now the chart of this looks terrible because it's a triple leveraged ETF, and oils have been in a bear market. But when it starts to move, it can really move. And we got into this today based on the 10 charts of the underlying. This is a big oil ETF. It's made up of 10 charts of the biggest oil companies in the world. That's how it is priced. We reviewed the charts of those and went with this as our prime way of playing it. Also want to show uh, two other leading oil names, Weatherford acting great, third day up. And another leader took a little bit of a break today, TDW. Watching for the 60-minute stochastic to reset on this as it's had three tight closes. If this could come back a little bit, maybe bounce off the 8. You can see the strength and the volume uh, on this Tidewater, and very clearly oil services have been acting extremely well. Two more charts and then we'll wrap it up. Datadog with a nice move today up through the handle in this long cup and handle. And finally, Unity, undercut reclaim of the 21 EMA up near the top of this cup. A little bit of a jagged, in fact, very jagged. Uh, but they've got the N factor with they're the chief software um, partner with Apple on the Apple uh, virtual reality headset. After a 4-day pullback and a little bit of a consolidation, money flowing back into there. Note how the consolidation was on below average volume today, above average volume, much like these big blue bars here led the advance. That's going to wrap it. As always, like to hear from you. You can email me, don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. Our flagship portfolio is named GROTECTION, designed to grow assets in a market uptrend, protect them during a downtrend or a bear market. We did plenty of protecting last year. Now we're growing, taking advantage of leading stocks and leading sectors in a bull market. If you like this approach, give us a shout. And with that, I'll wrap up the video for Tuesday, July 11th. This is Don Vandenbord with Revere Asset. Just the facts here at Revere. No opinions. We interpret what's going on in the market and present it to you every night. And we're very gratified for the kind notes that we get, appreciating the work that we do, and of course, for all of our clients. Thanks for listening and have a great day.